Total restructured loans were flat at 0.1%. Finally, on capital adequacy, our total CAPAD was at 15.9%, of which Tier 1 was at 13.2. I think I'll sort of, those are some of the key financials.
Your ratios of
Sorry.
GNPA may be on the lower side on a QOQ basis, but in absolute terms, your gross NPA has increased by 11% on a QOQ. Could you throw more light on that?
Sure. So if you really look at our gross NPAs, one, of course, our total loan book has been growing at a very healthy pace, well above the system growth rates, which have been closer to 10-11%. Our loan growth in the last few quarters has been somewhere between the high teens to the low 20s. If you look at then the gross NPA percentages, those have been anywhere between 0.9 and 1.1% again in the last few quarters, obviously as a percentage of the loan growth, which has again been fairly healthy. So in this particular quarter, we did see some increases in NPL, some slippages. The larger two segments in relative terms, because again, we're talking about explaining all of 6 basis points, okay? But we saw some increase in agri NPLs, some increase in business banking, which is SME. There was a little bit of a change in the method of calculation of NPLs for credit cards, because the date from which you start the 90-day calculation has been changed because of regulatory definition there. So all of these contributed to that increase of 6 basis points in this quarter. Again, if you look at where we were a year back, we were at 0.99 and we are back again at 0.97. So it's really been a few basis points of a reduction, a few basis points of an increase in the last 3 quarters.
Has there been any of these additions from RBI's directive which was issued to several banks?
No. So must clarify, because I know this has been in the news. We haven't had to make any NPL recognition issues. We actually had virtually negligible divergence, and a very, very marginal increase in provisioning for some one name which was already been done. So it's not even in double-digit crores. It was that small. And in any case, so there really hasn't been any impact of the AQR which had been conducted by RBI as far as we are concerned.
What about the CV segment growth? Could you tell us about that? For this quarter in March, you saw some sort of a turnaround. Is that the trend you continue to see?
Yeah, so if you look at the CV piece, it has continued to grow at a reasonably healthy pace. In fact, in this quarter, again, we've seen the sequential growth at about 3%. The year-on-year growth, therefore, between December of last year and December of this year, for the commercial vehicle and construction equipment portfolio put together, is 19.3%. So continues to do reasonably well. Obviously, as you know, the base in the last year had come off a little because that portfolio did contract last year.
And coming back to slippages bit, you did mention that agri has also contributed to a little bit of slippages.
Sure.
So Sukthankar, of course, agri business now has come in the limelight after the corporates that we will demand this and that. How is that impacting your business, and do you foresee more pain in this at all in this rest of this financial year?
Well, I think it'll be premature to try and jump into reading trends, because it's really been one quarter. I think, do you have pockets of the portfolio which were affected by various issues, relating to agri? I think yes. But overall, even after this small increase, and again, I must reiterate that it's not a major slippage, it's a small increase, we are still very comfortable with the overall portfolio. We recognize that there are costs of doing that particular business. And at the same time, this is a requirement from a regulatory perspective in terms of meeting our direct agri and small and marginal farmer lending. So we do manage our portfolio as best as we believe it should be done, while keeping in mind that this is a regulatory prescription that we should try as hard as possible to meet. So I wouldn't jump into conclusions whether they will see further pain or not. But by and large, I think we are reasonably comfortable with the way the portfolio is turning out.
And sectors in wholesale saw better growth in this quarter. There was an 18.9% jump.
Yeah. So we've actually seen that the better placed companies in most sectors, continue to see at least working capital growth. Clearly, we haven't yet seen any, huge pickup in capex related lending, and I think if you look at the investment numbers, that's not very surprising. Having said that, I think the fact that the commercial paper market has been growing and some part of the loan growth has been cannibalized by the markets, I think that's a reality. We've got a fairly distributed portfolio, and while we've seen growth in our short and medium tenor end, we've seen some in medium term loans and a little bit in the term side, but most of that would be more brownfield rather than greenfield.